We continue with the income received by the non-resident to be subjected to withholding tax. Next one will be special classes of income, which is section 4A capital. We have three categories: 4A1, 4A2 and 4A3. 4A1 refers to services in connection with use of property or rights, or installation or use of any plant, machinery or other apparatus purchased from the non-resident person. It includes provision of personnel for advisory and supervisory services. While for A2, previously it actually refers to technical advice, assistance or services in connection with technical management or administration of any scientific or commercial project. So, Budget 2019, however, has removed the word technical to cover a wider scope of services rendered, so that non-resident person will have no chance of hiding their income to, for example, what we call the non-technical service. So any service, advice, assistance, whether technical or non-technical in nature, it can be fall under section 4A2. So that will be the example of service: marketing advice, consultancy, legal service, and so on. However, it does not include commission payment. And we have 4A3 is a rental of movable properties such as equipment, machinery, ships, and so on. It does not include disposal of asset by the non-resident and freight charges paid to non-resident for export or shipment of goods. So we only focus on these services provided under these three categories. And it also includes non-refundable deposit and advance payment. I will explain further. So it is deemed derived from Malaysia under section 15A. The section is different, but the derivation, the condition for the derivation of income, the deemed derivation of income is actually similar with royalty, especially royalty, because interest has extra condition. So if you look here, responsibility for payment lies with the government or state's government or local authority, or responsibility lies with the resident person for that basis here, or if that payment is charged as an outgoing or expense against any income accruing in or derived from Malaysia, which can be by resident payer or non-resident payer carrying on a business in Malaysia. So the withholding tax provision for section 4A income is section 109B. So what section 109B say? Upon paying or crediting the payment, you must deduct 10%. So this 10% amount has to be paid to IRB within 1 month, which is 30 days. And again, it also is a final tax. However, with effect from 17 January 2017, all services under section 4A1 and 4A2 performed by non-resident are subject to withholding tax, whether inside or outside Malaysia. So from 17 January 2017 onwards, they say section 4A1 and 4A2 performed by the non-resident, whether performed in Malaysia or outside Malaysia, it will be subject to withholding tax. Prior to that period, only services performed in Malaysia will be subject to withholding tax. However, this treatment is only applicable for a short period because with effect from 6 September 2017, IRB issued new ruling under PR 11/2018 where income derived from Malaysia in respect of section 4A1 and 2 performed outside Malaysia will be exempted from tax, which means offshore service will be exempted. Only onshore, which is services performed in Malaysia, will be subject to withholding tax. So this one is the example, what I had explained just now. Tax treatment of offshore services under section 4A1 and 2. From 6 September 2017 onwards, it will not be subject to withholding tax, as PR 11/2018 applies. Offshore service, service performed outside Malaysia under section 4A1 and 2 will be exempted from tax. However, if the other situation from 17 January until the day before 6 September, which is 5th September, it will be subject to withholding tax. Okay, because Section 6 of Finance Act will apply, where Section 4E1 and 2 will be subject to withholding tax whether offshore, outside Malaysia, or onshore service in Malaysia. Another situation, the service was performed from 6 September, but the payment was made before 6 September. It can be that situation where you pay for the advance payment, okay, or deposit. So it still doesn't subject to withholding tax, okay, but since you already pay for the withholding tax, the tax refund can be claimed on the withholding tax paid previously. Okay, so let's look at this comparison, existence of business presence or permanent establishment PE in Malaysia. Okay, for other than contract payment, if you have business and if you don't have business in Malaysia. If you don't have business in Malaysia, the income received by the non-resident will only be subject to withholding tax, okay, according to specific withholding tax provision, and only limit to specific categories of income. Not all income will be subject to withholding tax if you don't have business in Malaysia. And the non-resident will not have to submit their tax return for the payment of withholding tax. Why? Because it is the payer who will act on the non-resident behalf, okay, to submit the withholding tax payment to the IRB. But if let's say business presence or PE exists in Malaysia, the income received by the non-resident will be subject to Malaysian tax as Section 4A income because it will then treated as their core business activity. So, since it is treated as Section 4A income, they have to file the tax return as usual, okay, for that particular year of assessment based on the non-resident status. Okay, so because we have the chargeable person can be resident or non-resident. So this is example of Section 4A special classes of income versus Section 4A business income. The payer pay to the non-resident leasing company. So that non-resident leasing company actually has a business source of income. Okay, so the payer pay the lease rental payment to the non-resident leasing company. If the non-resident leasing company has a branch in Malaysia, so branch is considered as PE. So when you say permanent establishment in Malaysia, somehow that they are actually have a business in Malaysia. So the payment received from the payer will be treated as Section 4A business income, since income tax can be collected from the branch in Malaysia. But if let's say the non-resident leasing company doesn't have branch in Malaysia, so they don't have business in Malaysia, so it will be treated as Section 4A capital income, whereby withholding tax of 10% shall apply to ensure that income tax payable by non-resident can be collected. Okay, so next is still about Section 4A, special classes of income. We look into reimbursement and disbursement. So what is reimbursement? So this is actually extracted from the public ruling. Reimbursement refers to out-of-pocket expenses incurred by the payee in the course of rendering services to the payer in respect of the use of movable property and subsequently reimbursed by the payer. So this is the case where payee want to perform service, for the non-resident payee, want to perform service for the resident, person, which is the resident payer. So they have to incur expenses. So they incur first the expenses and they subsequently reimburse, or claim, with the payer. So that is actually reimbursement. Example is cost of airfares, traveling, photocopying, printing charges, and accommodation. It is considered as Section 4A income to the payee, which is the non-resident payee, and will be subject to withholding tax of 10% on the gross amount under Section 109B. So that is for under special classes of income. However, only reimbursement on accommodation are excluded from the withholding tax computation, because it aimed at reducing the cost of services provided by the non-resident in the case if the onshore services are performed for quite a long period of time. So they don't have to pay the what we say here, the accommodation charges, okay, for long period and subject to tax. That's the reason why, okay, the reimbursement on accommodation are excluded. While disbursement refers to out-of-pocket expenses, still out-of-pocket expenses, but who incur these expenses is payer, okay, and pay to the third party on behalf of the payee, which means the invoice is, okay, for in the name of payee, in the cost of rendering services to the payer, or in respect, okay, of the use of movable property. So it is considered as Section 4A income as well to the payee and will be subject to withholding tax of 10% on gross amount under Section 109B, except similar like reimbursement, disbursement on accommodation. So even though payee actually doesn't pay anything, but that is somehow like so-called income, okay, because payer spend on behalf of the payee and pay to the third party to render the service, okay, for the payer. So this is the example, okay, for tax treatment on reimbursement. KJPT Limited, an Australian company, rendered technical service to Pillarworks Tena Berhad in June 2018. The services were performed in Malaysia. The invoice dated 15 July was for the value of 15,000, which included reimbursement on cost of airfares and hotel charges of 4,000 and 1,000 respectively. So we want to highlight on the reimbursement part. So reimbursement of 4,000 on cost of airfares will form part and parcel of the technical service fee and subject to withholding tax of 10% under Section 109B of Income Tax Act. However, reimbursement on hotel accommodation of 1,000 will not be included and not subject to withholding tax. So, what will be the responsibility for the payer, which is Pillarworks, on behalf of the non-resident? They will be responsible to withhold 10% of the gross fee, which is 14,000. Okay, so we will minus 15,000 minus with the 1,000 reimbursement on hotel charges, which is not part of the gross income, and remit to the Director General within 1 month after crediting the net technical service fee of 13,600 to KJPTE Limited. So meaning that the non-resident payee only receive the net amount after deducting the 10% withholding tax. So the gross amount paid to SH is subject to withholding tax under Section 109B of Income Tax Act at the rate of 10%. So payer should remit the sum of 100, which is 1,000 times 10%, and pay to the Director General within 1 month. However, if it can be confirmed that SH is a tax resident in Singapore, because Singapore has a double taxation agreement, okay, with Malaysia. So if you can confirm that SH is a tax resident in Singapore, you can actually charge a lower withholding tax rate, which is 5% compared to Malaysian rate 10%. The disbursement or out-of-pocket expenses of 500 incurred by roadworks are subject to withholding tax as well under Section 109B. Even though the payment for the airfare to access is made in full, withholding tax of 50 ringgit should be borne by the payee, and the payer should remit the sum of 50 ringgit to the Director General within 1 month, which is 10% from the 500. So total amount of withholding tax charge on the payee would be 150, which is 100 from the 1,000 value, 50 from the 500 ringgit. So the payer may subsequently recover the amount of 50 ringgit tax from the SH, okay, because they don't pay anything for that, but it's actually so-called their income. So for the purpose of this example, it is assumed that SH did not submit documentary proof of its resident status, so we cannot apply the lower tax rate of 5% as per DTA. Next, we also have deposit and advance payment. The first one is non-refundable deposit and advance payment. Non-refundable deposits and advance payment paid to non-resident payee for the service to be rendered or in respect of the use of movable property is also considered as Section 4A income to the payee, and then will be subject to withholding tax of 10%. Even though the services are yet to be performed, the advance payment or non-refundable deposits made are purely for the services which will be performed and form part of the gross amount payable for the services. So that's the reason these will be subject to withholding tax. However, for refundable deposits, for example, deposit paid upon signing of an agreement for services are refundable upon completion of the service. So hence, this does not form part of the gross income of a contract and does not subject to withholding tax. So this is the example. You can actually look into example 18 and 19. Example 18 for advance payment, example 19 for non-refundable deposits.